everyone, welcome to my channel. I'm Doris. I'm here to share with you about stock account and today's market updates today. Today is the Thanksgiving day, so the market has been closed. And let's talk about the banking crisis. The Bundesbank recently warned that German banks may still be in good capital conditions, but face challenges from rising interest rate payments, weak loan demand, and unrealized losses. Over the past year, the Eurozone benchmark interest rate has risen at the fastest pace on record, and banks have done a good job of responding to the change, but new operations conditions also carry risks, including a sharp drop in the value of securities held by banks. It is worth noting that the same factors triggered the US banking crisis and the UK pension crisis earlier this year, causing a stir in the global financial markets. Bundesbank Vice President Claudia Bock said in a statement on Thursday, nearly two-thirds of savings bank and credit unions currently have unrealized losses in their bank accounts, including loans and securities, and life insurance companies are also in a similar position. Its simulation shows that if banks pass on the impact of high interest rates at a similar rate as the past, their net interest income will fall by 29 billion euros this year, almost a third. She added, "It is too early to declare an alarm. After all, the impact of a higher interest rate hike has not yet fully felt. Increased risk to macroeconomic outlook is barely reflected in financial markets, which means greater risk to market price adjustments and corresponding losses." She also noted that rising bank financing costs also pose a threat to their interest rate income. European Central Bank Vice President Louis de Genuidos made a similar view on Wednesday, warning investors in an interview against wishful thinking in the economy. The ECB also noted the economic slowdown as a threat to the region's financial system. The more troubling is the credit risk for commercial real estate that's also rising. After high interest rates are quickly passed on to borrowers, the risk has declined the demand for the real estate purchases and led to given a stable labor market, the reporter said, the long-term challenges have put additional burden on the country's financial system. The Bundes said major German banks need to increase provisions for non-performing loans in the medium term because of the low growth outlook in the coming years, especially for highly indebted companies that need to adjust substantially to adapt to a new framework. Meanwhile, German lawmakers are struggling to find a solution to the growing budget crisis that could threaten the future of the German coalition government. Book said, given the structural change we face, given the uncertainty around us, corporate bankruptcies are likely to increase and credit risk is also likely to rise. That is why we need to really make banks both macro and micro aware of the risk and urge them to do what they can do to increase resilience. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.